Now, to understand this bullish setup, we have to understand the context and really what was going on in terms of levels on the S&P 500. So yesterday, the day prior, the day I took the short setup, we're going to get into this one. What's very important is we had a very strong and major resistance level at 56.65. In fact, if you watched my last video on my YouTube channel, this was a level and a trade that I took a setup off of. Now, fast forward to today, August 27th, the market overnight was selling off into a strong level of demand. And in my pre-market plan, I post these every single day of the levels I'm watching, setups that I'm looking to take, was I found it very difficult to be shorting a breakdown still above a major level of support or demand at 56.16, 56.10, that it has to be broken for major downside to come. In fact, at the open, I was really watching for this level to hold because something was sparking my interest that buyers were appearing, and my job was to read these buyers, make sure they are strong in the market, and then get long in following their footsteps. So we could see here in the overnight session, about 30 minutes before the market had opened, we had sold off into this level of demand, and I want you all to keep an eye on the inflated volume or how large it was when it hit this level of demand at 56.16. On my most recent video, I was explaining that when there is high volume in such cases like this, it becomes very significant for me to closely watch the reaction and watch the order flow and the volume out of this level. So the market had opened up, and in the first 15 minutes, we had sold off into this level of demand. And going to a 1-minute chart, what we're going to see here is more inflated volume as the market is selling off into this level of demand. And on a 1-minute chart, you're going to see what they call an engulfing candle. Engulfing candles are significant to me because what this shows is either A, there's not many passive sellers in the market, or B, there's so many aggressive buyers in the market that we moved up engulfed with ease, and price had an easier time to move up. So this engulfing green candle we could see right here, and the candle before that had significantly higher volume, validating there's some significant interest at this 56.16 level of demand. Now, and on top of all of this, context is key. On top of all this high volume and the engulfing candle and the strong buying volume, look what happens. The market had broken under the pre-market low at 56.12. Here we have pre-market low, broke under it, engulfed directly after that, indicated very strong buyers were present at 9:41 Eastern time. Now, what this looks like off of the order flow is as the market is selling off into 56.16 level of demand, we could see the sell-off. We got the immediate reaction to the upside at 9:41 Eastern time with this strong buying prints. When I see something like this, the period of consolidation or the period where the market had bounced becomes very significant to watch, because if there are true buyers in this range, ideally, I would want to see those buyers then defend price if the market retests it. And a few minutes later, about 2-3 minutes after, the market had retested where that engulfing candle formed and had retested those buyers, which is the cause of this engulfing candle right here, and that level held. What it looks like on a footprint chart is you can see the market moved up here with ease, and as it moved up, the buying volume delta cumulatively had increased, and this area of low volume, which is highlighted by this box right here, held on 1, 2, and 3 different attempts, indicated that number 1, buyers were present there, and number 2, buyers defended price and buyers supported it. With this in mind, this was my reasoning and my entry to take the market long when it was selling off into this level of demand. Trying it long at 56.15, my stop loss was about 3 points away, and I was going for a 11 to 13 point reward. So really good risk to reward ratio. In fact, it was a 6.4 to 1 R multiple, about $3,000 worth of risk, going for a $15,000 reward, but I sold into strength, enabling me to make a little more profits off of this setup. And this trade lasted about 9 minutes worth of time. So what it looks like off the candlestick chart is here's the engulfing. You can't see the buying volume on the engulfing. This is why a tool that reads volume by price is more significant. However, it held on 1, 2, 3 different attempts right there. And that was my reasoning to enter the market long when this level held. I knew as long as this held that there was true buyers present in the market. Some early sellers were trapped, and it has the fuel or the capability of seeing a strong rally up, especially with the resistance that formed yesterday, like I said, at 56.65. So I'm in this thing long. The market begins to rally up. I was just targeting the high of day here. That really was my target, was the intraday high of day. But the buying was super strong. And as soon as I see a lot of volume come in, that's my signal to get out, because a pullback is likely, or it's possible a top could come in. So I got all out of this trade at 56.30 into that strength. And this trade, like I said, lasted so quick just by spotting those buyers in the market. I would want to see an immediate reaction out of participants, and that's what I saw. Yes, the market continued to rally after I got out of this trade, but my plan was to sell at the high of day, got a few more points out of it, and yeah, I could have made X amount of more, but I followed my plan, and that's the only thing I could do on this setup. All right, now August 26th, which was yesterday, on Monday to start the week, my pre-market plan was this. I had a key level, like I said, from the previous recap video. I explained this level. If you have not watched it, I recommend watching my most recent video other than this one. At 56.66, I explained where that level was from. I could not be longing a breakout at a strong level of resistance and at a strong level where there are sellers once present. I am first looking to be a seller Monday morning when the market opened at this level of resistance. I was watching for a strong pop into the level. If you think about it, if a lot of people are buying a breakout, right? So if everybody is long in it, buying a high a day, buying a high of resistance breakout, they have to buy and somebody else has to sell. If retail is losing and retail is doing what's so obvious, buying a breakout above a resistance level, who is selling to them? Whoever is selling to them is going to be the original sellers, or possibly even new sellers present at a resistance level that formed because of old sellers. So we had supply of 56.66, looking to short a strong pop into the level where majority buy the breakout and become trapped. If they do, I'm looking for shorts targeting 5640 demand. The market had opened up, and about 5 minutes into the market being open, we were seeing a lot of buying effort above the high. It was not going anywhere. If I see a lot of buying effort present in the market and that buying effort is unsuccessful, it's very likely somebody is on the other side of the market patiently selling, absorbing all the liquidity, and selling to whoever is buying, showing the most amount of effort. So a very good sign in the market is if you are longing or shorting something and you see a lot of buyers or sellers present, but the market is not moving or really not budging at all, it's a good indication the market is likely to reverse. So really, when the market opened up, I was definitely biased. I don't really like having a bias, but everything was aligning to be a seller. Nothing was aligning to be a bull. And I was really now looking for ways to get short at my level of interest. Now, I reviewed this trade on Monday on my Instagram. If you're not following me on there, it's a really good resource. I recommend doing so. I'll post a link to follow me in the description below. I recap all the trades. I have really good tips and tricks that you're just not going to find anywhere else on the internet. It's a good resource. You're seriously missing out if you're not following me on my Instagram. We could see 56.66 had rejected the market on Thursday, had closely rejected it on Friday, and now in the overnight session, it's rejecting it so well on Monday. The market had opened up, and similar to the trade that I took today on August 27th, this, though, broke the pre-market high at a level of resistance. Today, we saw a break under the pre-market low at a level of demand. Here, we're seeing a break above the pre-market high at a level of supply and at a level of resistance. In the first 4 or 5 minutes, it's very apparent. Look at the strong buying volume that came in here. Majority of retail were buying this breakout. Now, I can confirm that claim very well by looking at this footprint chart here. We can see a lot of volume transacted up here. We could see a lot of volume being transacted up here. And what's so important is it's right at 56.66 key level, marked by now this red line. So the market had broken above resistance. We're seeing a lot of volume in these blue circles, in these green circles, and it's really not going anywhere. So with that in mind, I am now super bearish, and now my job is to look for ways to get short. Guess where I got the market short? When the old resistance level then acted as resistance again, proving that sellers are present in the market. The market had popped into my level of resistance after that double top, after that failed breakout of the resistance level, and I got short at 56.64 with a 2-point stop loss going for a 14 to 15 point target. It was about a 6, 7 to 1 R multiple. And this was about a $3,700 worth of risk for a $22,000 reward. Great risk to reward. And this trade lasted about 25, 30 minutes as we rejected this level of resistance really well. We had popped back into it. You could see the double top. You could see the strong volume prints coming in. I am in this thing short. And then at one point, I was a little concerned. And this is why you always have to trust yourself and trust your thesis. I cannot tell you how many times I've exited a trade early and the thing works in my favor. And I get so frustrated and upset with myself because I didn't follow my plan. In this example, I'm not going to lie. I was ready to bail on this trade. In fact, in the intraday commentary tab, I was not liking how VWAP was not breaking. It was supporting price. We were failing to break under the low a day. And I'm going to be honest, I was ready to bail out of this trade, but I was trying to control that voice in my head telling me, Carmine, get out of it. I was trying to tell myself, Carmine, stay in this thing because the weakness is strong at the high. We have trapped buyers at the high of the day. We have a resistance level rejecting. And eventually this thing broke under VWAP and began to sell off. And I took profits at the 56.50s. I had to walk away after this because 56.50 was my target. And I saw it sell off after my target hit. And I was like, man, I could have made X amount of more dollars if I stayed in this thing. So I had to walk away so I didn't, force any BS trades. And it was just simple analysis. Like, you have to keep trading simple. You have to just focus on price and volume, understand where buyers and sellers are factored in at, and trade around it. Create levels of interest, gauge the reaction around those levels of interest, manage your risk, follow your plan, keep your emotions out of it, and let the market do its thing. When you have a system and when you have an edge, you can enter the market with confidence every day because you have something that's repeatable that when you see it. Yes, it might not work out for you today. Yeah, it might not work out for you tomorrow. But in the long run, it's going to work out because that's what you have built your edge around. And the cherry on top to all this is risk management, keeping your losses small and letting your winners take care of the losing trades. If you can do all this and you're watching this video and struggling or trying to find light at the end of the tunnel, listen to that advice. No matter what strategy you trade, whether it's how I trade, whether it's something you learned elsewhere online, just focus on something that works for you based off of your risk parameters and your personality the best, and manage your risk around it because at the end of the day, yes, we can call ourselves day traders, but we at the end of the day are risk managers because we're not going to approach the market and always be correct. We will be wrong, but our job is to protect ourselves as much as possible when we are wrong. That way, when we are right, we're taking care of all those losing trades that we took prior to this. So I'm going to end the video on that note. If you're new to my channel, I would appreciate you to subscribe to it. If you have any questions, let me know in the comments below. And also, I would really appreciate a thumbs up and a like on this video. Catch you guys on the next one. Peace out.